Per usual, everything on this channel is for educational purposes only. It is not intended as financial advice. Last Thursday, I did a random live stream here on YouTube, and it was pretty well received. So we're going to keep doing those going forward. It's going to be a Thursday, 2 p.m. Eastern. I know some of you were angry at me for not announcing that sooner. Kind of just did it and saw what happened. So this Thursday, 2 p.m., if you're interested in going through some charts live with me. Otherwise, it'll be on YouTube immediately after the stream, where you can watch it at your leisure. This week we have nothing Monday or Tuesday, but we do have CPI coming up on the 13th and all the fun stuff that goes along with that. Jobless claims. Then we've got FOMC next week. So it'll be a fun 2 weeks in macroeconomic newsland. I look forward to the day when I don't have to pay attention to FOMC again. And realistically, that day may be sooner rather than later if they just continue to hold rates for 6 months until something breaks. We'll see what happens. We'll see what their language says. We'll see if they have any forward guidance in between. But based on current trueflation expectations as well as nowcast expectations, we are stabilizing at a level where at this point we're going to see, can this actually get brought back down below 3% on the CPI scale, the CPI measurement. Now we will have a month-over-month increase, just as suggested here, 3.6, 3.8, whatever other changes are coming in the next couple days. I don't know if they update this the week of CPI, but I think the consensus forecast is somewhere between 3.6 and 3.8, which would be an increase. Now, I hope the market is aware of this. I hope that the market's not going to freak out, but no guarantee that people are going to see this increase and think, oh, the Fed's going to definitely keep raising. Whereas we look at the probabilities of whether or not the Fed will raise, and that is not on the table and remains off the table for the foreseeable future. No meeting in October, so we've got a decent amount of time to digest even more data. After next week's meeting, unemployment came up, don't forget, a couple weeks ago, still quite low. Jolts came way down. You know, they'll talk about all this stuff in the meeting next week, but I think that's why we're seeing probabilities for rates where they are. My next question for them is, okay, it's April 2024. Inflation is still between 3 and 4%. Are we going to keep raising? Are we going to move our inflation target, as some are suggesting and have suggested, from 2% to some higher range? I can't imagine they would do that while they were trying to reach the goal. I think you can do that after you reach the goal, but that's another conversation. So until something breaks massively that they don't think they can fix with a BTFP-like program, we're probably near the ceiling for rates. Maybe they raise a couple more times, maybe they don't. But where we sit here, markets are saying no more raises at the moment. And just to look at some of the numbers, Bianco puts together great data. If we look at FOMC meetings, 10 days, 10 trading days out, 100% hit rate. You know, even before that, 11 days out, 99% hit rate on predicting what the Fed is going to do, as he says, correctly priced in or not. If you look at the Powell era, 10, 11 days out, bang on the money, usually, right? We're talking well over 90% at predicting what is going to happen in the meeting. So unless the sky explodes between now and the meeting, probably no hike this meeting. Just another interesting data point. A couple weeks back, people were talking about the Fed out of Atlanta's GDP forecasts. Now, I don't know if there is some sort of nuance here that I'm not understanding between the Atlanta Fed and the New York Fed, but the New York Fed also has a nowcast, not to be confused with Fed Now, but they have a nowcast, which also has a GDP tracker and sort of what GDP looks like based on data releases. Maybe not important this week, maybe not important for many weeks, but just an interesting bookmark to have to look at once we start getting closer to the election and whether or not we're in a recession and what the NBER is going to do and blah, 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 blah. The reason I bring up this New York data is because it had been suspended until just a couple days ago. I just randomly checked it again today, and I realized it was back up and running, fully functional. Anyway, just an interesting data point there. As far as legacy markets, we still have extreme dollar strength, which is bearish for crypto, bearish for risk. DXY does have a bear div on it. where it stands here. It has a higher high in price, lower high in RSI. Oil arguably the same, higher highs on lower momentum. Both oil and DXY look extremely bullish to me still, regardless, even if they do pull back this week. But that's certainly something everyone's going to be watching. Does oil break 90? It's September. Is that what ultimately brings down markets? Is this expectation that energy is going to get expensive and inflation is going to go higher and the Fed's going to be forced to keep raising? We'll see. I don't know if everybody has that line of thinking, but it's one way you can think about it. Oil also has an Adam and Eve, a technical pattern, W double bottom shaped VU that is projecting 90 to 96. So not quite there yet. As for the S&P and the NASDAQ or the Qs, both to me still look like potential head and shoulders candidates. Both still have a bearish TK cross with the price above cloud, which is telling you, dear trader, and me, dear trader, that the time to be in these trades was the 80% of the run that this caught from the beginning of the year until a few days ago, a week ago. But here it is telling you to stay out, to stay neutral in the moment. Now the pattern will help you front run that a little bit by maybe illuminating a bias that wouldn't otherwise be there based on trend metrics. So it's not telling you to short here, but it's definitely telling you to stay out based on the cloud, right? Cloud for DXY, complete opposite. It's saying skies are clear, right? Everything looks great. I don't have the oil cloud on here, but it's also very bullish on the daily. I haven't seen it yet, but another potential technical thing to watch here on NASDAQ and the Qs would be some sort of ABCD pattern where you just project the previous drawdown low to the current local high. So that would give you basically an edge to edge of 350 on the Qs and I think 4250 or something on the SPX. So not a lot of bullish evidence on either of these charts. And if we lose the yearly pivot on the Qs, that's not going to be great either. Something to watch throughout September. Before I talk about the crypto stuff, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. And they just recently added alerts. You do have to be logged in to see them. So grab yourself an account, take this for a spin. One way to add them to the chart is, let's take the Bitcoin chart as an example. And let's say we're watching the 25,400 level. Right click on the chart, click set alert. And it gives you a few options here. Here we can add a trigger above, below, at, or above. You know, depending on how you want to set the alert, if you want to set it even higher, even lower, right? That's up to you on how you trade, on how you take action on something, how important a certain horizontal or diagonal, whatever it is may be. But once we decide where we want an alert, we can create the alert. You'll see alert created in the bottom right. And then to add the alerts widget, what I like to do in the top left here in the order form, we can add the widget. We'll find alerts there, and we will have our active alerts. We'll have history, and you can also add new alerts on this screen. You can change the ticker if you want, and all sorts of fun stuff. So let's say, you're watching some BTC pair that you never look at, right? And you want to know when it makes a new lower low. Then this is one great way to do that. Obviously, way more things you can do with alerts, but a welcomed addition to the Kraken Pro trading stack. So let's talk about crypto. One of the things that obviously is of utmost importance is rates and regulation. And we still have high rates. We still have constrictive regulatory environment, I guess you could say, right? We don't have a place to really go. No one's really welcoming us with open arms here on the crypto side of things. And that may be most evident in this sort of onshore, offshore stablecoin pair, Tether versus USDC. We still do not see inflows into USDC. Tether also basically flat here. Now, if we look at the weekly flows for most of the year have been positive for Tether and have been negative for USDC. That has quieted down a little bit, but really what you want to see, obviously, is inflows for both continuously, because that's one way to measure what's going on in the ecosystem. Are people leaving? Are they staying? Are they coming? What are they doing? Right. As it stands here, relatively flat still. Looking at Bitcoin based on trend metrics, we are below the cloud, below the yearly pivot. Now the bullish case here to me is obvious. We get above the cloud, we get above the pivot, different story, right? We can talk about 30K, 32, new highs, new yearly high, all that stuff. You can measure out this as a W double bottom if we make higher highs here. That is the ultimate bullish case. That is not my expectation. I really don't even want to think about that until we're at 28K again, which could happen this week, but the trend is telling you probably not. Monthly seasonality is telling you probably not. Pre-halving year is telling you probably not going to look so pretty. DXY is telling you things are probably bearish, right? So there's very few reasons that this goes up. I don't even know what a BlackRock ETF announcement would look like. Would it be more bullish than a BTFP week in the moment? Right, long term it's great. I'm talking about right now as we sit here today. I'm not so sure it's going to be crazy bullish on the day. I think it will be bullish. I don't know how bullish, but that's always in the back of everybody's mind. Let's say the SEC comes out tomorrow and says, we have an ETF now, right? It's going to launch on this date, blah, blah, blah. That's always a possibility. Let's assume that doesn't happen. This continues to look bearish to me. There's no other way to really paint that. Alligator Fractal, which is another trend system, is telling you look for shorts, just like the cloud. It's telling you short re-entry at the current support fractal, somewhere around 25.4. Not rocket science. Basically, we make lower lows here on a daily close, and this system encourages adding to a short, certainly remaining short, with a stop loss at the current local high. So not bullish on the alligator fractal either. If we zoom out a little bit, we look at potential downside supports. Should we go lower? Obviously, the current local low, everyone's going to look at. You're also going to be looking to the BTFP low in March, which is around 20K, the psychological support at 20K. Let's say these three humps here are a head and shoulders pattern. That's also pointing to a range between 18.5 and 21. We've got volume support from 19 to 21.5. We also have a volume support at 23.1. We also have pitchfork supports, kind of sort of also at 23.1, right? So my max bearishness would be a 20K retest, potentially this month, potentially within the quarter. I think it depends on a catalyst. I don't see any immediate bearish catalysts other than just being bearish, but the news could always change that, right? So this year we've certainly wrecked the bears. Maybe it's time to wreck the bulls. Weekly B-bands, we haven't broken down below the weekly B-band yet. And during any bullish or bearish continuation, typically we have closes, successive closes on strong trends above or below the bands. So this tells me we probably aren't done. If we're truly bearish, we probably aren't done, which I know, shocker, rocket science type stuff, but the B-bands certainly confirm that. And weekly cloud continues to say, nope, we don't have a edge-to-edge trigger just yet. We do not have a close inside of the cloud. Continues to just tease us in perpetuity, it feels like, but I will celebrate that day on the next candle close inside the cloud on the weekly. Not there yet. Switching gears to ETH, really more of the same. Bearish on any metric you can look at. I mean, look at total volume on all exchanges. Okay. If you want to be depressed and sad, look at things like that, because nobody's here, nobody cares. And that's okay. It's September. Again, don't expect some massive miracle here. I expect this to be bearish. If you look at ETH with volume profile and measuring this out as a head and shoulders, again, doesn't look great for ETH either, right? 1100, 1300, perfectly reasonable. Giant support at 1200 based on volume. Volume supports above that as well. From 13 to 15, though, there's really nothing here volume-wise. So I don't expect this to stop if we start to roll below 15. There's a decent gap based on the volume to around 1350. So maybe what this looks like is within the next couple weeks, a series of larger candles that wick into this area. This is like the dream, the bear dream. Series of larger candles that wick into this zone and then close somewhere around 1370. Let's say on the quarter, we close around 1370. Something like that. Certainly reasonable. I think all hope is lost on any sort of bullishness on ETH in the moment, even if it gets some sort of futures approval, ETF approval. Just not there yet. ETH also below the weekly cloud, and maybe even teasing a bearish TK cross here. If we get a bearish TK cross on ETH on the weekly, That is extremely, extremely bearish. So get ready for that. That doesn't mean we will break the current low, but it certainly suggests we aren't going higher anytime soon. So we may see an interesting crisscross here on weekly TK cross. Certainly not triggering any sort of edge-to-edge trade just yet. Looking at ETH a little bit more, just zooming out. I was kind of having fun looking at the log regression, looking at the log curves. All this stuff tells me there are certainly supports lower. The midpoint here is at 927. The ultimate lower bound is like 420. I think that would only happen if stakers start to panic unlock sub 1,000, right? I think that gets us there when people start making poor decisions. So we haven't seen evidence for that yet, but I think that's how we get there. It's just a mass unlock of staking, and then you see it on chain, right? It's like waiting for liquidations to fill on a futures exchange or an exchange with leverage. You know, everyone's going to be watching that unlock process and seeing, oh, there's X amount of ETH that wants to unlock, right? You don't unlock ETH because you're having a good time. So it'll definitely be interesting to watch that on chain if it does happen. On the log curves, the low point here, also around 1,000. So we'll see if either of these break completely, but the log curves will do that first. And then on the pitchfork for ETH, depending on the 3 points you choose here, there's either basically no room or a little bit of room left. And alternatively, if we decide to bounce at this level, I'm highlighting the midpoint, the midline, where ETH could go. So again, I'm not bullish ETH here either. Wouldn't expect a miracle. One other thing to consider for both BTC and ETH is the gap at CME futures. Not expect this to necessarily hit this week, but typically if we have a gap that's open, we fill it over time eventually, just as we did on the way up. Throughout the year, there was a massive bearish gap here at 2,800 that we eventually filled. So also something to consider. ETH BTC, nothing's going on here. Flat, dead, neutral, unimportant until it's above 07. ETH USD, unimportant until it's above 2,000, really, or below 1,000. I think those are the levels everyone's watching for the most part. BNB also gets another week to decide its fate, potentially, if things flip more bearish for BNB. It doesn't have a lot of room until things get super interesting based on technicals. No idea what's happening on chain, no idea whether or not certain loans could be liquidated, blah, blah, blah. Just based on technicals, this looks like it's eventually headed lower. Maybe it makes another diagonal support here over the next 3 months, but as it stands here, probably goes lower, probably sub 50. That's probably where it's headed. And that would be an ugly, ugly day for a lot of stuff across the board. Not something I want to see, but the technicals currently are not bullish in any regard. Sol was another one I was looking at a lot this week, really because there were a lot of people talking about it. You know, I'm not bullish Sol long term. I know a lot of people are. Community this, GitHub that. There's a VPVR support at 15. I think this is headed for sub 10 eventually. Certainly doesn't look like it wants to turn the corner just yet. I was thinking maybe falling wedge, maybe bull div, but no bull div yet. You're still getting lower lows in price, lower lows in momentum. So sub 10 would make sense to me on that front. And then just across the board for alts, doesn't look like it's going to be a good week. You know, either this finds support here and I'm totally wrong on the market cap level, or things just start to look uglier and uglier. And hey, maybe this just holds the range. That's another, you know, neutral option, is that maybe we invalidate the inverted head and shoulders, but at the end of the day, we just stay within this range and we just range for another 6 months on market cap. But I really doubt that that happens based on just the bearishness of everything across the board. I mean, if Bitcoin drops 5% on the month, many alts will be down 20% on the month. That's typically how that works. So that's all for this one. Like, dislike, comment, share, subscribe, and happy trading.